how is this technology disrupting the finance industry, and what do you kind of see happening over the next couple of years?
So, Mark, by explaining my own entry into the industry, you'd also get the idea that I come from the traditional part of the industry. I come from the old-fashioned guys who look at something like crypto and think, nah, that'll go away.
Right.
The world will not change on us. And, it's all evil and all that. And so I needed to go through my own journey, trying to make sense of how change actually happens. It's not even just finance. It's just how industries change, how technology, comes and seeps into society and becomes mainstream, all of that. So where we are right now is the traditional finance people are beginning to appreciate that the rules that apply to crypto are beginning to apply to them too. So all that happened was that traditional banking became increasingly digitized. And when something like Silicon Valley Bank, SVB happened, the traditional bankers found out that their depositors could just walk away from them, in an instant. Like, Peter Thiel throws in a tweet on a Tuesday morning. By Thursday morning, by Wednesday morning, it's $10 billion gone. Thursday morning, just about the entire deposit is gone. By Friday morning, the bank is in trouble. The thing about crypto and the beauty of crypto is that it is 24/7. In other words, there are no market hours, and it provides its own liquidity. All of its transactions are not even average. They are real-time transactions. The value is created and is carried in the transaction. Financial transactions in the traditional banking are highly leveraged. In other words, banks never have all the money that they say that they have on the balance sheet. So what they are most afraid of is a bank run at any one time, and especially a digital bank run.
We're going through something absolutely historic.
Technologies across the board are growing exponentially.
It's a disruption that's going to completely redefine the way businesses compete.
In the next decade, we're going to lose 40% of today's Fortune 500 companies.
The exponential growth of computing is continuing.
AI is nowhere near its full potential.
Whether you like it or not, that the future cannot be stopped by anyone.
Hi there, everybody. This is Mark Verbenkoff, and welcome back to the Future Tech and Foresight podcast. This is episode number 165. And today is kind of one of my favorite types of podcasts, where we shift a little bit away from some of the practical ideas, some of the real use cases, and focus on much larger, comprehensive ideas and trends. And today's episode is going to be focused on the future of finance, and we touch on a number of kind of different topics within the future of finance. But I think it's a really interesting episode because it gives a kind of comprehensive view of where the financial world has been, where it kind of is today, and where it most likely will go in the next couple of years. And for me personally, it was quite an interesting and easy, I guess you could say, interview to hold, because my guest is just so knowledgeable on this subject. I only had to ask a few questions, and he was able to give quite in-depth responses to each of these questions. So we do touch on one of the things that I definitely want to know more about. I've talked about on the podcast a number of times, but I think that there's kind of no end to the rabbit hole that you could go down of Central Bank Digital Currencies, or CBDCs. So we definitely touch on that. I made a point of asking a couple questions of Emmanuel, my guest today, about where CBDCs kind of fall in the spectrum of good or evil. We do touch on cybersecurity, cryptocurrencies, the impact of artificial intelligence. So we try to give kind of comprehensive might be the best term here, perspective on where the finance industry is going, what it will lead to, how it's going to impact you and all of your lives, businesses, etc. And again, my guest was just so knowledgeable on the subject. I am very happy to finally be publishing this. We recorded it quite some time ago. And yeah, I think it's just a very interesting episode that I'm really happy to share. I'm not going to do too long of a pre-introduction because I think that the interview was so interesting. But as is the case always, I want to introduce my guest, Emmanuel Daniel. So he is an author, entrepreneur, model train enthusiast, and corporate strategist, and is a global thought leader in the future of finance and its impact on business and society. Back in 1996, Emmanuel founded the research, publication and consulting house TAB Global, which allowed him to forge relationships with leaders in banking and finance around the world. His book, which is a large part of the subject of today's episode, titled The Great Transition, outlines the future of the banking industry as it shifts from platform technologies to a new level of personalization never seen before. I can't stress enough how knowledgeable Emmanuel is on this subject. It was an absolute pleasure to have him on the podcast, and I hope that the interview or the podcast brings about maybe some insights that you haven't thought about before, not just at a high level for the entire banking or finance industry, but also how these changes might actually influence your life directly in the coming years, and how you can kind of think about where things are going so you can position yourself properly. So thanks again for listening, as always.
Great. Well, hi there, Emmanuel. Thank you very much for coming onto the podcast today to talk about something that I don't think I've touched on the podcast too often. We've talked about cryptocurrencies a number of times, but not finance and the future of finance at a more general level. So it's great to have you on to talk about, well, I've got a list of some really interesting things. Looking forward to it. Thanks for coming on.
Thanks for having me on, Mark. I just got back from Africa, 20-hour trip, and setting myself up again. So let's go.
Excellent. Happy to hear your enthusiasm. How did you come into this world? What made you interested to get into the world of finance? We'll be talking about AI, cryptocurrencies, CBDCs, a number of these things that I think are on a lot of people's minds, but finance is a kind of a greater, larger umbrella term. What initially got you interested in this interesting world?
What's interesting is I'm not even originally from finance.
Okay.
But, I started life training to be a lawyer, spent 10 years in the corporate world. And then I needed to do something my own. And I looked around and somehow meandered towards publishing as an industry. And then I happened to choose finance as the industry that I wanted to pursue. And this was in 1996. Okay, so that's how long I've been in this industry. And the reason finance was because at that time, I come from Southeast Asia, which, as you know, I'm right now in Singapore, and the countries surrounding this region, Malaysia, Indonesia, Thailand, they were essentially very controlled economies. And governments were very, sensitive about what to say about that. So you couldn't make a living, running a publishing business in ordinary stuff like the state and all that. And for me, I just sort of meandered towards finance because I very quickly, instinctively realized that I call finance the cathedral industry every country that you go to. It's an industry which everyone has something to do with from the time you're born to the time you die. And when you land a plane, when you land, a flight from anywhere to any country in the world, you'd see the finance is right there in the middle of the center of the city. The institutions are the most important. And if you know the chairman of the bank, the CEO, you practically met the most important people in that country. So that's sort of why I entered the industry. But then also, I fell in love with it because on the one hand, when you look at finance, it's a balance sheet business. Like, you have a liabilities base, which is you take deposits from people, and then you have an asset base, which is you deploy the deposits that you got to lend, and then that's where you make your money from. But on another level, it's a social enterprise. All of finance is social enterprise. The most successful financial institutions are those that have a close relationship with their customer base. So if you take deposits, for example, the banks that have a strong long-term relationship with the largest number of customers in any country have the cheapest form of funding. And with that cheapest form of funding, they're able to do many things that banks that get their funding from other sources like capital markets and so on are not able to pursue. And because these banks are closest to their customers, they have a stable relationship with a known quantity, meaning that customers that you can go back to lend money, knowing that they are good customers and that you'll be profitable at the lowest possible cost. Now, all of that today has actually moved on to digitization, but the rules are still the same. And sometimes the new digital players find that they have to learn the things that the traditional bankers have known for a long time. So the way in which I narrate the finance story is from a social perspective. And then, the institution itself is a very complex organization that's trying to do many disparate things at the same time. And that's where also technology comes in to, process information all in one place, all of that stuff. So I think that's my story in finance. So I hope that it wouldn't frighten, some of your audience or think that finance is something that, you need a certain level of understanding or anything of that sort. If you understand what holds society together, you actually understand finance already.
Oh, well, that's good to hear. Well, I'm happy to hear. I'm also happy to say that most of my audience members are pretty smart. So I'm sure that they're not going to be scared away, and if they understand that, they'll be interested in this.
But I just want to bring a different perspective, so that it brings out the living, breathing aspect of finance, and that's how we can recreate an understanding of where it's going.
Okay, interesting. Well, maybe before we jump into where it's going, I think, as we talked about beforehand, a good way to kind of frame this conversation is to just briefly touch on maybe some of the most important points about what has already happened. So I would say that over the last 20 years, well, maybe 24 years or so, the internet was probably the most transformative technology for, I would say, most industries. You alluded to banks or finance institutions digitizing. How has the internet transformed or changed or disrupted the finance industry? And I think that the reason I'm asking this is because it kind of frames how an industry gets changed, and then we can jump into some of the other things that are on people's minds, like AI and cryptocurrencies, etc.
There was a time when finance was about arbitraging information that is not available to one side and it's available to the other side. So when you think about foreign exchange, for example, or even interest rates, the bank knows something that the customer doesn't. And so the bank puts itself in a very special position to intermediate transactions between customers, between lenders and borrowers, between people who need to make payments, people who need exchange their money and all of that. So if you ask me to put my finger on the one thing that the internet has done, is that it's leveled the playing field. It's given customers the same information that institutions have. So over a long period of time, in the last 20 years actually, financial institutions have been scrambling to remain relevant as an intermediator in a world where the customer is becoming increasingly, valuable and increasingly empowered by the same information that the banks have. And you see this on every front in finance. You see this in the markets, for example, where today retail investors coagulating together and forming meme groups and interest groups together on Reddit and stuff can be a force to be reckoned with, just like an institutional investor used to be. So that's on the markets front. On the foreign exchange front, the rates that only banks used to be able to dictate, today a whole range of new players are able to provide those rates and so on. So the banking industry has been, and finance in general, the insurance industry, the investment banking industry, has been struggling to remain relevant. And it's just come to a point where the only way they can continue being relevant is when the regulator steps in and licenses the business. And that's the only, that's the only hurdle left between what banks are able to do and what the ordinary person is not able to do today. But there are new players and what they call disruptors who are, by eating away at the edges and bringing down the edifice of the industry. And so the traditional players have figured out, why is the intermediation business relevant still? And that's actually the big story in banking, in finance today.
Very interesting. Yeah. The more I talk to interesting and smarter guests than myself, the more I keep hearing about technology being this kind of power of democratization, right? It brings information, capabilities, whatever, to the average citizen that didn't have that kind of power before. And then these kinds of institutions, exactly as you're saying, kind of have to scramble to figure out how to stay relevant. So I'm happy to hear, whether it's good or not. I'm happy to hear that these trends on the podcast are talked about and that they're correct, and that the same thing is happening in the finance industry, which I am a little bit less knowledgeable on. So you were saying a couple things there that sparked, even though we have already it listed down as a topic, but there were certain keywords that's like, oh, like that's where cryptocurrencies come in. And as we talked about before recording, the podcast has certainly had a number of different crypto and Bitcoin focused episodes, which like I became incredibly passionate about this technology back in 2017, 2018. Slumped down in my interest, but it's always in the background, right? Like I'm going to El Salvador on Saturday, actually. So I've been there once before. It's a fascinating place. So cryptocurrency and of course Bitcoin, more than anything, is the topic du jour. It's everybody down there is aware of it, and there's lots of societal changes happening because of it. But let's shift the conversation towards the future, right? And what is happening with all these different technologies. And why don't we start with cryptocurrencies? So how do you see crypto? And I don't know if we want to differentiate between crypto and Bitcoin, or blockchain and crypto and Bitcoin, but like, how is this technology disrupting the finance industry, and what do you kind of see happening over the next couple of years?
So, Mark, by explaining my own entry into the industry, you'd also get the idea that I come from the traditional part of the industry. I come from the old-fashioned guys who look at something like crypto and think, nah, that'll go away.
Right.
The world will not change on us. And it's all evil and all that. And so I needed to go through my own journey, trying to make sense of how change actually happens. It's not even just finance. It's just how industries change, how technology, comes and seeps into society and becomes mainstream, all of that. So where we are right now is the traditional finance people are beginning to appreciate that the rules that apply to crypto are beginning to apply to them too. So all that happened was that traditional banking became increasingly digitized. And when something like Silicon Valley Bank, SVB, happened, the traditional bankers found out that their depositors could just walk away from them, in an instant. Like, Peter Thiel throws in a tweet on a Tuesday morning. By Thursday morning, by Wednesday morning, it's $10 billion gone. Thursday morning, just about an entire deposit base gone. By Friday morning, the bank is in trouble. The thing about crypto and the beauty of crypto is that it is 24/7. In other words, there are no market hours, and it provides its own liquidity. All of its transactions are not even average. They are real-time transactions. The value is created and is carried in the transaction. Financial transactions in the traditional banking are highly leveraged. In other words, banks never have all the money that they say that they have on the balance sheet. And so what they are most afraid of is a bank run at any one time, and especially a digital bank run. And so now the traditional bankers are learning all the rules that apply to crypto actually start to apply to them too. And they're trying to figure out how to make their own markets 24/7, how to create their own liquidity. And then on top of that, something that crypto does very well is carry information in addition to the transaction itself, in addition to the money itself. So in Ethereum, for example, you can put in an assignment into it and rules of engagement and all of that. So what we see is that crypto is finding its way to be the tail that wags the dog, as it were, and banks are finding that they need to succumb to the same rules that apply in crypto. I'm actually taking a shortcut right through to where we should be today, because I'm sure that some of the other guests have explained, for example, blockchain, especially permissionless blockchain, brings parties to interact with each other without an intermediary. So the traditional banks have to figure out, what their role is in a permissionless transaction. And what the regulators have done is they practically ban permissionless transactions. So the technology exists, but you can't really use it in finance right now. Then the question is, how will that seep in and eventually become de rigueur and dictate how transactions take place between parties? Today, right now, banks have come, the leading banks in every economy have come to a point where their own regulators have put in place rules for engagement where they can become players in digital assets. So that's how far we've come now. You go around the world, you go to especially the countries which have laws in place to guide digital assets. Singapore, the UAE, Luxembourg, some the UK, Hong Kong. All of these countries now have their main institutions starting their own little version of a digital asset business. They start by trying to be custodians in digital assets business because custodians is something that the banking industry understands. But then they realize that they can also tokenize their own deposits. In other words, this is like taking the deposits business one level even further than where they are today. Where we are today with the deposits business is it's highly digitized because of digital payments around the world in different countries. In Canada, for example, the payments business is digital, so you can actually pay instantly to each other directly, facilitated by the banking system. But if you take it one more level, you can not only pay, but you can actually provide instructions on the payment, when it's made, to whom it's made, under what conditions, what Ethereum does. And so when you tokenize your deposits, you take the competition one more level into crypto space, crypto rules, crypto jungle, and banks start to figure out that you don't just compete for deposits by giving a better interest rate. You also make your deposits functional by adding functionalities into your tokenized service. So we are just at the cusp of that. In fact, it's the Bank for International Settlements that has put in the rules that enable banks to tokenize the deposits starting from 1st of January 2025. So that's where we are right now. We are at the door of the convergence between traditional and new finance.
Super interesting. And so do you see going forward, it's these banks and these financial institutions that, whether they're tokenizing or using some sort of, internal blockchain-esque type technology, that those will be the leaders and the others will just kind of fall by the wayside, or the laggards will just become less and less relevant? How do you see the market essentially shifting over the next, 5-10 years or something?
Everything is now possible. So I put in place all the elements. So, decentralization, disintermediation, all of that stuff. It's like the oil industry and climate change, right? Everyone knows that oil is bad and fossil fuels is bad. But if you look at the work that's required to make that transition to renewables, it's a massive journey. And the oil majors are not going away anytime soon. And then you have the war, the Russian invasion of Ukraine and all of that, and how the oil industry dictates who the winners and losers are. So it's now turned into a 100-year war of transition from into renewable. In the same way, all the technology that disintermediates traditional banking, it's there. They're all in place. Then the question is, how will that transition evolve? To use a Hemingway phrase, it's like how does someone become bankrupt slowly and then suddenly? It just looks like it's happening, and then it suddenly happens.
Right.
We need inflection points in finance. And the thing I say in my book, by the way, the great transition, the personalization of finance, goes back to first principles of what needs to happen that triggers the change that we're looking for. And something I say in my book is change in finance only ever happens in times of crisis and out of desperation, out of difficult situation, not out of purpose, not out of design, not out of the regulators, Lajaze, the regulators' goodwill and all that. So we now exist in the finance industry where all of these new players coming on street are saying, oh, you know what, we've come up with technology, we're called big tech, and we're going to change the industry. And then when you look at what they do, they're actually reinforcing the industry that has always existed. They're not bringing on the new stuff. They're not making the breakthroughs that makes decentralized finance normal. So the thing is that it is a longer ride than we like to think. And one of the things that I spend my time on is think a lot about how disintermediation will eventually happen. Because right through human society, from the days of the Assyrians, the Babylonians, right to where we are today, human society always functioned on, or has been structured on the asymmetry of information, that someone knows something the other person doesn't, and that's how the person who knows that information generates an income. And today we arrived where that asymmetry of information has become more symmetric, and yet the intermediation business is not going away. So I spent a lot of time thinking about what it would take to tear down the edifices that we know right now. But partly they continue their role because the traditional institutions continue their role because the regulators come in and protect them. But if they weren't protected, the alternative is also quite difficult to maneuver, because it brings in very many bad actors, and we go through a phase of uncertainty before any industry or any revolution finally settles down and becomes regulated by society itself and not necessarily a follow regulator. Okay, and I even go into that in my book, because in society there are many activities that today are not regulated by a formal regulator, and until finance gets to that phase, we will find that the regulators will slow down the process a little bit so that they can identify and they can have visibility on what exactly they are regulating in the process.
Okay. And one topic that keeps coming up in the crypto podcast that I've had before is this developing world versus developed world relevance for cryptocurrencies, and of course Bitcoin at large. There's this idea that, and I honestly don't know how much I believe it. To a certain degree, yes, but there's this idea that cryptocurrencies in general are really only for developing countries. It's not for America or Canada or Singapore or Europe or things like that, because we are already banked and we have all of the accounts that we need. We have kind of the banking system opportunities that many people elsewhere in the world don't. And cryptocurrencies are kind of the tool that enables the unbanked, the people in developing countries to kind of have their own banking system essentially overnight if they start using this. As I mentioned, I'm going to El Salvador in just a couple of days. I need to get ready for that. But I've been down there before, and there are these what they're calling circular communities, ecosystems where people are just using Bitcoin and they're not using any fiat currency. And it's because they have cell phones, but they don't have bank accounts because X, Y, and Z reasons. What is your perspective on that? Do you think that there's some truth to that? Do you think that, or do you think that cryptocurrencies are still relevant for the developing world and maybe in just some other different kind of configuration?
Yeah. So what we're talking about here is how change eventually comes into society as a whole. And the same points that you just mentioned applies to the French Revolution.
Sure.
Does finance, right? So how did the French Revolution finally, get rid of the monarchy and introduce, constitutional presidency and democracy and all of that. And that took more than 150 years before they got to anything meaningful. And then there were times when they kept going back to the emperor model, when Napoleon III came on and all that. So it was a very messy process. And the same difficulties applied in any industry, and that's how finance is working through it. The thing about developing countries is that when you have a clean slate, you're able to embrace new technologies very quickly. Don't just talk about crypto, but think about M-Pesa, for example, in Kenya. I just came from Africa, so I'm thinking a lot about everything that's happening in Africa. And right now, by the way, cross-border small value payments, the revolution is in Africa more than any other parts of the world. And there are new payment players, just mushrooming all over the place. And they're discovering payment processes between countries that they thought had nothing to do with each other. Mm-hmm. Okay, so it's frontier territory. And if you take M-Pesa, it worked very well in Kenya, where the bank rate was like less than 20% of the population was banked. I think it was really much, even I get the number, but it was really very low. And then when they tried to implement or popularize M-Pesa in other African countries, they found that the countries that had an established banking system, so when they took it to Nigeria, it wasn't as successful as in Kenya. When they took it to South Africa, it was totally irrelevant because South Africa has got a very established banking industry and so on. Then what actually happens is that the challenging technology puts the established industry on notice that there are many inefficiencies in the established industry that needs to go over time. So where the US is right now is that it's a highly established payment processing infrastructure where Visa, MasterCard dominate at the retail level, and then you have the ACHs at the processing level, at the bulk levels. And each of these players has so many intermediaries under them that they all are part of the gravy trail, that they're not going to give up their income base as a result of technology changes. And the way the US changes, and you see this in the transition from cable to streaming. The cable guys didn't give up their industry just because streaming came online. The streaming players had to first capture about 10% of the market share, and then they needed to unravel the pricing mechanism, and only then did streaming become mainstream. So the same type of forces need to work through the established market, and I think eventually they will come. They will become a reality because the cost base of the established models are way too high today. And the gravy trains of intermediaries who generate the income by being part of the process, there's just too many of them. And digitization and technology and decentralization is making the technology available, but getting rid of the hierarchy of intermediaries is a long-term gain. And then on top of that, you put the regulator into the picture, and the regulator safeguards the incumbent model because that's the model that they understand. And then they try to slow down the process by digitizing each one of the players in the process. So if you take a Stripe transaction, for example, at the back end, the Stripe transaction is good old-fashioned Visa, MasterCard processing. I don't consider that revolutionary. The front end has been made much more, they call it frictionless, and you onboard a whole range of new players. But the back end processing still goes back to the traditional players. Now, what needs to happen for it to be considered truly revolutionary is when the whole process is carried out on a tokenized, value, which is something that's crypto, and it diminishes the role of a whole range of intermediaries who operate on the back end. So it's not that the traditional traditionally well-established countries are not are not going to change. They will. It will crumble, but the process is a longer one.
Good to hear. I think some of my friends down in El Salvador will like to hear that, because they're certainly of the opinion that these financial institutions need to crumble.
Yeah. Actually, El Salvador, I've got great friends in El Salvador. I've been there, been to Bitcoin Beach, and I've talked to the players to see what will make it happen. And yes, today, by the way, Bitcoin isn't as mainstream as the government wanted it to be, and people have gone back to try and to change their Bitcoin and their El Salvadorian version of it to traditional money if they can. The incentive structure isn't there yet.
Yeah.
And sometimes the incentive structures are put in place not because the state wanted it, but because of desperation of the people. So if you go to the corollary of El Salvador is Nigeria, by the way, because Nigeria tried to introduce central bank digital currencies, and it backfired, and people went back into cryptocurrency. And the reason is they trusted cryptocurrencies more than they trusted their state. So it is just the mirror effect of El Salvador. So that's the point I'm making in my book, that transformations in finance always are triggered by by desperation and crisis, and not by design. And the U.S. history itself has many instances. The creation of the central bank system in the U.S., Federal Reserve banking system, the U.S. rejected it from the time of independence, 1776, to about 1907, before it finally succumbed and created a federal banking system because of a banking crisis. So, and then 1971. The end of the dollar peg against gold, all of that. So the inflection points are always in moments of crisis rather than out of design.
Well, I think that's a perfect segue into kind of this next vertical that we wanted to look at, which is CBDCs, right? Central Bank Digital Currencies. Now, depending on who you listen to and who you believe, there's certainly two, I would say, very different takes on CBDCs. One, and I know I have many listeners that are skeptical about this technology, about whether to trust the state, whether to trust programmable money. There's a lot of concern and hesitancy about, well, this is just a tool for further government control. Which sounds like, and I've already forgot, was it Ethiopia where they tried to implement this and they rejected it. So could you explain, well, simply your thoughts on CBDCs, if there are benefits to it, if it's coming, like many of the people that I listen to and that tell me they're very concerned about it. What's your perspective on this, and how it's gonna come about into the future, if it is going to at all?
Yeah. So, long story short, the Bank for International Settlements is finally standing down from the idea of a retail CBDC for a number of reasons. The actual reason is nothing to do with control and the privacy of the residents, of the citizens, and all of that. The actual reason is that it just doesn't make sense, because if a central bank has a relationship with the end user, then you actually make the entire intermediation industry of the banking system redundant. The user doesn't need a bank, and then banks have to scramble to make themselves relevant in the process, and it's going to add costs to the banking system. So that's the actual playbook by which retail CBDCs don't look like they're going to fly. At the same time, of course, the U.S. Congress has now put in legislation going through, which will prevent the Federal Reserve banking system to introduce a CBDC in the U.S. and that's out of the privacy concern, right? Which is that human rights and all of that. So the thing is that what the BIS is now leading towards is to encourage wholesale CBDCs, which technically even I find it justifiable, because wholesale CBDC means that every central bank needs to digitize its backstop asset base or backstop currency. So central banks are lenders of last resort, and they need to digitize that process, and that's what wholesale CBDC is about. And then what the BIS is encouraging is for banks to tokenize their deposit business, and that's what I was alluding to in the first part of the conversation. That tokenized deposits are becoming mainstream, or just on the cusp of becoming mainstream. And what that means is that your own local bank will be issuing its own version of what is a stable coin by another name. Okay. And so what I think I'm seeing is that regular banks will become the de rigueur issuers of their own version of stable coins, and that's where the competition between banks will take place eventually. And I think we're just at the cusp of that.
Okay. Maybe one other point on here, because I know some of the people in the audience are going to wish for me to ask this. So, as you alluded to before, things change when there's a crisis, right? So if there is a lot of discussion or whispers of, large scale financial troubles, I think right now the stock market has taken a hit. Crypto has certainly taken a hit. It's bringing about new thoughts or conversations, or renewed thoughts and conversations about, banking crises, financial crises, etc. You're saying that the International Bank of Settlements and the U.S. Congress are shutting down thoughts of a CBDC because it doesn't necessarily make sense. But if there are these whispers of potential larger crises, do you think that like a large crisis will ignore the International Bank of Settlements and the Congress's push right now? And it's like, oh, well, there's a crisis. We need to push in CBDCs in order to, whatever they would say, help people solve, potential, rampant inflation and things like that. I'm not super knowledgeable about these ideas, but this is certainly what I hear in the shadows and the whispers of people that are very concerned about the implementation of CBDCs.
So the thing about CBDCs is that it's the retail CBDC that is being discredited today.
Sure.
The wholesale CBDC is still at a business case, and that's what's being pursued by the Bank for International Settlement. The mother of all banking crises is the relevance of the US dollar as a global currency, dictating global transactions for the foreseeable future. The US is really afraid of losing that status, because losing that status means that it loses the ability to continue issuing debt at will, and that there will always be a buyer of US debt. And right now it's it's an existentialist crisis. It's not at the doorstep, because from what I see, although the dollar is not exactly the favored currency globally, and there are a number of initiatives, mostly on bipartisan basis, to try and find alternatives to the US dollar. The US dollar now accounts for about 80% of global transactions. And the point is that even if it went down to 40%, there will be no other player at 40% to challenge the role of the US dollar. But if it went down from 80 to 60%, what gives is that the ability of the US Treasury continue issuing US Treasury bonds and know that there will be willing buyers out there in the marketplace at lower prices. So they will have to provide higher yields in order to still be an attractive form of secure backstop investment for central banks around the world. So if that comes to a crisis point, And today, the US has already gone past 100% of GDP for the amount of debt it carries. And if that goes, that reduces the number of options available to the Treasury and options available to the Federal Reserve banking system in the way in which it navigates rates in the US and navigates inflation and so on. The only thing left to do is to digitize the US dollar. and to digitize it means that it continues the relevance of the US dollar as the favorite, as the as a standard form of transaction globally for the foreseeable future. And the way to do that is to allow every American bank to digitize their local deposit business and then to globalize that. So that's where I see that we will probably not see we will definitely not see a retail USD, but we will see a digitized US deposit base, which will operate like a standard as a stable coin, and that to me is the digitization of the US dollar going forward. So I think that that's how you think about how crises will trigger innovations that you'd never thought possible before, to come into place.
Okay, clear. Okay, very clear. Let's shift gears here a little bit. I don't want to focus too much on potential conspiracy theories about CBDCs for too long, but the main point of hype of technology in the world of technology is, of course, artificial intelligence and generative artificial intelligence in particular. We talked about a little bit before your perspective on the impact of AI on the finance industry over the next couple of years. I think it's very interesting. I'm just going to take a sit back and let you share your thoughts because I think it's maybe the most, I don't want to say relevant, but maybe it's the easiest thing for people to understand, especially those that have been listening to the podcast, because AI has been such a large trend over the last year or so.
The banking industry, from the time I started getting involved in it in 1996, has always been talking about the future of banking, always been talking about the impact of technology, and always been talking about phrases. I mean, if you throw in phrases like innovation and stuff like that, forever, okay? And in those days, it was ATMs were innovation. And then it became database processing became a revolution and all that. So they've been using the same language right to where we are today. The big thing about AI is that the transformation that you see in banking is the same as you see in any large industry, which is how do you process large amounts of disparate information sitting in silos in different parts of the organization, all in one place? And how will that affect the ability of the institution to be organized, or how should it be organized? So that's really the revolution that AI is bringing into banking. The easy part, which is like putting AI in chatbots and raising the stakes on conversation with customers, all that. Those I consider to be just productivity tools. They're not transformational at all. What is transformational is the work that banks need to do on the core banking front. And core banking is basically a cumbersome, huge technology infrastructure that has many layers to it. And at the core is something called the general ledger. And banks have up to today, in the way it's been run traditionally, the general ledger is the starting of a bank's relationship with you as a customer. So it basically opens an account, and the information in that account is static, it's historical, it's tested, okay? And all the transactions are taking place every day, and it needs to batch process that on the core banking system at the end of every day. And that's how old-fashioned banking is, despite everything that's happening on the bells and whistles front. So what AI is proposing to do is to give life to this general ledger, that it can process live information as it happens, tell you about the customer and meet his needs at that point. So then what I do is I go around talking to these core banking vendors, and there are a number of them around the world, and several of them have been around forever. Okay, and say, how is AI changing your model by which you service your banking customers? Which is right now, if you ask any of these core banking vendors, they service their customers by spending years, tinkering with the existing system. They all exist in many different silos. A lot of work needs to be done. The bank has 1,000 employees, processing the transactions, and then the vendors have 1,000 employees, and they're trying to bring that all together. Now, AI, and then of course cloud technology and all that, and I say this in my book, makes it such that the information that sits outside the bank is more important than the information that sits in the bank.
Okay.
So today, the bank protects the passive information it has on customers, like its life depends on it. Like, they don't allow their API partners access to it. They are under regulatory control, all of that. And yet, it tells them nothing about the customer, what the customer is doing today, what the customer's needs are today, and how they, need to be more interactive in the way they serve their customers. And it also doesn't tell them enough of how to work against cybersecurity crimes, which are taking place outside the institution. And the safety and security for cybersecurity is actually to be far more networked than they are today. So those are the revolutions that AI is bringing into the banking system, and it's bringing the same revolution into any number of large industries, healthcare, insurance, transportation, all of that. So that's where we are with AI right now. We are the cusp again of another revolution, and the revolution isn't what we think it is.
Right. Oh, okay. Very, very interesting. Just maybe to highlight the cybersecurity point, because this is something that comes up all the time whenever you're talking about emerging technologies. In the conversations that you're having with other finance experts, is there kind of a fear or I don't know, whispers again of, oh shoot, like cybersecurity is going to be taken over by the amount of AI-powered hackers? Like, are banks and other institutions, are they aware of, this one aspect of the revolution coming where hackers and, scammers, et cetera, were able to use typical software tools, but now they're going to be empowered by AI, and they're going to be able to, I would say, break through some of the protective barriers that a lot of these institutions have been putting in place over the last 10, 20 years, because AI is going to be able to, I guess, just supercharge them or superpower these hackers. What's kind of your sense in the conversations that you're having with these people?
As long as safety and security is about keeping the door locked, then the hackers will get through, and AI will help them get through. The AI will help them figure out the codes to access. So something else I say in my book is that we're actually in transition from a markets economy to a network economy, and the rules are incredibly different one from the other. And in the network economy, I keep my finger on Bitcoin especially, and ask questions like, will Bitcoin eventually be broken if we have put enough AI into it, if we put enough quantum computing into it? Will the algorithms be broken? And the answers that I'm getting are, it becomes even more secure because the more networked it is, that's what provides the security. So right now, when we think about network security, when we think about keeping the door locked, that's traditional thinking, which is, how do you keep your system safe and secure, and disallow bad actors from accessing. But if your safety and security is about being even more networked, where your network players validate each other and provide security with each other, the quantum computing type of energy that you have, it reinforces your ability to look, to secure your network rather than think of it as a door that has to be kept locked. So and that's what I'm saying to the banks, which is, and then the banks have figured it out already, which is that they can't have a banking system which doesn't give access or slows down access or makes access a lot more, put a lot of friction into it. That doesn't work today. So the fundamental thinking has to take place in what we mean by security today. And technology around Bitcoin gives us guidance in terms of how we should think about it. And the answers I'm getting about Bitcoin is that Bitcoin will be able to ace, cybersecurity precisely because the more people own Bitcoin, that's where the security and safety of Bitcoin is. And we need to, extend that thinking into all other areas of institutional security.
Okay, I like that answer. That makes sense. I can conceptualize it relatively easily enough. I guess the last question that I have for you here, Emmanuel, and I know that we're going a little bit over time. You touched on it a little bit, I think, in the first answer that you were giving, and this is about the personalization of finance. And I think for the majority of the conversation, we've been talking about institutions and finance at a general level, but for this last part, why don't we take it more to the consumer level? You're talking about, if I remember correctly, institutions are going to be offering better rates for consumers in order to attract them as this revolution and change happens over the next couple of years. How will I guess just basic consumers like you and me be impacted over the next couple of years if we're talking about CBDCs, AI, cryptocurrencies in general? Are there like a couple unique things that tie everything together, or am I thinking too simplistically for consumers?
Whenever I say the phrase personalization of finance, every bank in the world thinks that they understand what I'm saying. And to them, it means to make the customer feel special, that he's the only customer in the world to us, and that we can design any amount of product specification around that customer. So then I go back into the conversation. I say that personalization of finance simply means the customer no longer needs you. The technologies today exist that enables the customer to interact with each other. So the intermediary, has to figure out how it wants to be part of that process of that transaction. And that's where the real battle for the future of finance will be. Some of it is taking place on the device front. So today we've become, totally dependent on the mobile device. Now think about what that's going to look like when AI is going to be embedded in every device that you use in everyday life, from the refrigerator to your car, which already has a lot of AI in it. And then you start seeing that the mobile device will also lose its dominance as an intermediary, and that the intelligence will now start sitting on a whole range of devices out there. And then you take it down to the relationship that the financial institution has with the customer. So the real battle is for financial institutions to reconfigure why they are relevant in the intermediation business, and what they will look like if they weren't protected by regulation and protected by a banking license. So all of the technologies that disintermediate banking as we know it already exists. The only reason they're not commonplace yet is because banks are protected by regulation and the sheer inertia of society to embrace new technology as it evolves. So if you take something like peer-to-peer lending, for example, we've had the first iteration of peer-to-peer lending, which is the platform players provided the platform and thought that they will bring borrower and lender or investor and investee to meet each other. And that sort of lost its way because they started talking the same language as banks. That is that when I'm a peer-to-peer lender for mortgages, what I'm actually facilitating is a mortgage. But with AI, a peer-to-peer platform looks even more revolutionary, which is that not only can peer-to-peer players meet each other, they can actually know a lot more about each other than we do right now. So that technology will evolve, and it might take 60, 70 years, and then its inflection points come when moments of trust are betrayed, and then it goes to the next level. The fact that we're having this call on a Zoom device, and Zoom became popular because of COVID, and the technology existed for a while, and then COVID changed our lifestyle and made this commonplace. So we need crises like this to trigger the next inflection of the or the next level of the inflection, and then it evolves from there over a period of time. But the big question I still have in my head, which is, can human society operate without intermediaries? That's a very valid question. And how do intermediaries reinvent themselves in a world where where individuals are able to transact with each other? And that's what I mean by personalization, which is the individual is empowered with his own ability to create communities around himself and create relationships around himself. And that's a whole different conversation, which I hope that I can have with you, because platform technologies as we know them to be today, they've been given an extension of life because of AI being deployed on platforms like Microsoft and so on. But actually, the alternative already exists, which is through blockchain technology. Each of us can be a platform on our own right, and each of us can create our own communities around us. And that's what blockchain makes available or makes possible. And we didn't go down that route. We actually extended the life of the intermediary. So that's where we are right now. It might be 100-year process. We don't know. We need to give it enough runway for that whole story to evolve. But I would say this, that human society has never existed without an intermediary function in it. And if it is going to be at the cusp of that, then a whole different way of thinking needs to come into place, and we haven't seen that yet.
Very interesting. Yeah, well, I mean, all of this is very relevant and specific to my little trip that's coming up, because I've certainly met a lot of people down in El Salvador. Again, one of the few countries that I know that's using Bitcoin at a relatively large scale. There's communities out there that they don't use any fiat. They don't touch it at all. They are living 100% on Bitcoin, and it's all peer-to-peer, and there are no intermediaries apart from the app that they're using. And you've been down there, so you understand. And I'm also not just speaking to you, but the audience members. It's as fast as using a debit card or paying on your cell phone. The apps are that good. I went down there the first time 5 or 6 months ago. It blew my mind. It's like, oh, well, this ecosystem has evolved and matured significantly over the last couple of years. So I think what you're saying is not just interesting, but it's also relevant, and it's certainly going to happen in some parts of the world. Yeah,
and in surprising parts of the world, before the usual suspects. Yes. So cast your net wide. I think that I do see real crypto adoption in ordinary society in Nigeria, in Tanzania, in Zimbabwe especially, and that's because ordinary people just don't trust the state. But the funny thing about El Salvador is that the state is asking to be trusted.
Yes.
Yes. And that's exactly why crypto is not as although it's the state that's sponsoring the process. It's very interesting.
Yeah.
But there's so much to learn about the social elements that need to come into place to make a technology like crypto commonplace. Mm-hmm. And the social aspect, and in Bitcoin Beach, I asked this question. I said, what gives you the confidence to hold Bitcoin for your everyday life when the value of Bitcoin fluctuates so much? And they said, and the answer I got from one lady who pays a rent in Bitcoin was that as long as the counterparty is also on Bitcoin, I'm good. So then that triggered in my mind that, okay, both sides of the transaction must use the same token. Okay, got it. So then, that's how I construct my understanding of how this will evolve.
Very interesting. Well, I'll have to have you back on after some more times down in El Salvador and understand this stuff a little bit better and ask you some other questions. Thank you very much for coming on, Emmanuel. And I don't want to take up more of your time. But,
Yeah. No, we're good. But I think that we need to give time for the audience to digest, and then we can take on all new tea.
Yes.
And next time we talk. Yeah.
Happy to do so. I will have the link to your book, of course, on the show notes. Your LinkedIn. Is there any other place that you want people to reach out to you and follow what you're doing?
The easiest place is emmanueldaniel.com, because that's where I write my comments, my thoughts. And I really need to do more writing, and I'm preparing for my second book, which is actually more than just finance. It's about civilizations and how they evolve as well. So emmanueldaniel.com is the one stop, and from there you get to see everything about me.
Perfect. Well, thank you very much for coming on. It was certainly informative and educational for me. As I said at the very outset, I follow finance as much as possible, but I'm much more into AI and actual technology. So it was great to have you on. Certainly opened up a lot of other questions for me, and looking forward to having you back on the podcast at some point.
Take care. Thanks, Bob. Thanks for the pleasure.
Thanks a lot.
Well, thanks for listening to this week's Future Tech and Foresight podcast. If you like what you've heard here, there are, of course, a number of ways that you can support the podcast. The best way would be to leave a review on Apple Podcasts or give a rating on Spotify, which you can find a step-by-step explanation for on the futuretechandforesight.com website. Alternatively, feel free to leave a comment either on the episode show notes or the YouTube channel where you can see video recordings of the interviews. And finally, if you are part of an organization that is aware of the disruptive and transformational impact that emerging and future technologies will bring and want to know more, please get in touch to hear about the strategic foresight services that we offer and how we can help future-proof your organization and take advantage of the phenomenal opportunities available to survive and thrive in the future.
A lot of future-shocked people and future-shocked institutions in our society are simply overwhelmed.
Once there is superintelligence, the fate of humanity may depend on what the superintelligence does.
Science fact is catching up to science fiction.
The first truly intelligent machine will be the last invention that humanity needs to make.
The only scarcity that will exist in the future is that which we decide to create ourselves as humans.
Within a 10-year design revolution, we can have all humanity living the highest standard living anybody's ever known.
Progress is accelerating at an exponential pace, and it's going to reach a point where progress is so fast it's going to be a singularity.
We are probably one of the last generations of Homo sapiens.
Every single headline points to the birth pangs of a Type 1 civilization.